Hi everybody, this is Jean from Total Tax and Accounting, and today I'm going to talk to you about injured spouse. What is an injured spouse? So this is from a tax perspective. I have filed a joint return with my spouse, and then some or all of a refund was taken to pay the spouse's tax liability. So if that's happened to you, you need to file for relief when you become aware that the IRS is intending to take your refund and use it for your spouse's tax bill. So you do not you're going to need to file a form 8857. You're not going to claim innocent spouse. Okay, there's a difference between innocent spouse, and I'll put a link to that video. We're talking about injured spouse. So generally, both spouses are responsible for paying the full amount of tax, interest, and penalties on your joint return. However, you could qualify for innocent spouse if you may be relieved from all or part of the joint liability. You qualify from that if any of the following apply: if there's an understatement of tax because your spouse omitted income or claimed false deductions or credits, and you did not know or have reason to know. So there is an understatement of tax and you are divorced, separated, or no longer living with your spouse. And so given all the facts and circumstances, it would not be fair to hold you liable for the tax. That's a lot to say, but there is a specific process you need to go through if you feel that your refund is used to pay your spouse's liability. A fairly common example of this is let's say the husband is a wage earner, and so he has withholding tax kept out, and the wife has a business, a Schedule C business, and she owes self-employment tax. Really, the tax liability arises from her activity and not his, and because he paid in with his withholding, it might generate a refund, but they keep it because the wife didn't pay her estimated taxes. That's just a scenario. But that's the idea behind an injured spouse. So the person who paid in is injured by the tax liability of the other person. So you're going to file Form 8379 for if you're seeking this injured spouse relief. Um, I'll show you the form in the next slide, but it's going to actually make you allocate your income and deductions. So it's as if it splits the two of them. If you made $100,000 jointly and one of you made 40,000 and one of you made 60,000, you've got a 40-60 split. That's real easy math, but that's the process that you're going to go through so that it can bifurcate the income deductions and the resulting tax liability or overpayment. So keep in mind these take about 14 weeks to process. So if you just go down this sheet, it walks you through, and it's a yes/no algorithm here, or not an algorithm, a flowchart. So you enter the tax year, and then did you file a joint return? Yes. If you answer no, you stop. So you go to the next thing. Did the IRS use the joint overpayment to pay anything past due that wasn't yours? If it's no, then you stop. Yes, you move on. And so you continue through this form answering all these questions in order to qualify to even continue on the form. And then here's what I was referring to. They want you splitting out your income, and they want it allocated to the injured spouse and then the other spouse. And this should result in some number that says this is really what I should have paid in for taxes. There's other options for resolving your debt. You might do an offer in compromise, which is where you settle your tax debt for less than you owe. This is the thing you hear on TV or print ads or radio where, they can get you pennies on the dollar and you give them a call. All right, the national companies have nothing on your local tax practitioner or tax attorney. They don't have any special proprietary software. Nothing. They just know the system like I know the system and like other practitioners know the system. But there is a specific way that you have to approach an offer and compromise, and you might not even qualify. So I beg of you to contact somebody local that you trust that is an enrolled agent, a CPA, or an attorney that can help you determine if you are an offer and compromise. And yes, that's going to cost you a consultation fee, but that's going to be better than a $5, $8, $10,000 flat payment you're going to make to this company who may or may not help you, and you'll never see that again. Who needs more financial stress if you owe the IRS? Okay, I'm done with my speech. You can also do an installment agreement. If we go through the 433 form, which is what we would use to determine if you were an offer candidate, that's going to tell us if you're uncollectible, which just means your leftover income shows that you are unable to pay now. And so that's a temporary status. It's revisited, I believe, annually. So if your circumstances change, you get a better job, your income goes up, your income goes down. Or you can discharge your taxes through bankruptcy. And this is really only applicable to income tax. Again, no trust funds, so that's not payroll tax or that's not sales tax. So you just have to understand that distinction. As we mentioned before, the form takes 14 weeks if you mail it, or 11 weeks if you file it electronically, and you can do that, I'm sure, through a tax practitioner who has access to e-file. If you are filing it by itself after the return, you need about 8 weeks. So thanks for watching my video about injured spouse. If you know somebody who needs help, please, please, please have them reach out to an enrolled agent like myself, a CPA, or an attorney, and help them work through this process so they can perhaps get their refund returned to them. As always, thanks for watching.